Alright, these are the stock picks for the week of August 24. I'm going to, as always, give you 5 stock picks for the upcoming week. Now, this is going to be a bit more difficult as you probably know the market is, well, at least correcting, possibly crashing. So the main question that comes into mind is, what do we do when a market is crashing? What can we pick? What are the stock picks that are good for us? By the way, this is the QQQ. It's pretty good stock to trade if you just want to trade an index. And as you can see, in the past 2 days, it fell all the way from 110 to 102. The oscillator is showing us this. It's a little difficult to understand because it's an indicator of an indicator. But what this essentially is saying is that people are taking their money out of the stock market. So we need to know if we are going to stay in the stock market, where should we put our money? So I have come up with 5 stocks, and I kind of reversed the order. Instead of looking at the stock this time, I looked at the industry first. So I chose 5 industries that I believe, or 5 stock types that I believe will fare quite well regardless of what happens in this upcoming week during this week. So these are the five stock picks for the week. Now, some people would say biotech is not a good pick while the market is crashing, um, but there's always going to be a need for medical services and medical technologies. If your wife has cancer, for example, and the stock market crashes, you're not going to stop her chemotherapy. So the med tech stock pick for this week is Array. And I'm just going to be using stockcharts.com and Morningstar to get a good idea of what that stock is in terms of what the company's about, financials, and the technical indicators. So Morningstar will tell us a summary. This main page, after you put in a quote, gives you a pretty good idea of what that stock is. It'll give you a summary down below. Company profile is, well, radiation oncology company. You can look at any of the key stats. These are important financial ratios. As you can see, it's a little overpriced, and well, we don't have the price to earnings, so we can only rely on that price to book. It's apparently a bit overpriced, but as you can see, the financials are all pretty good. They have a bit of debt, which could be dangerous in a market crash, but I mainly chose this because it looks like money is going back into this stock as the market's crashing. And even though the market shows candlesticks going way down, we have Array kind of stabilizing and showing a what looks to be a bullish engulfing candlestick, which is usually predicative of an upward trend. Now I'm using the moving averages of 20 and 30 here, but we really want to look at the dailies instead of the weeklies and see where we're at there. As you can see, we just in the last day we just rose above both of those moving averages, and that's often a buying signal. The only problem is both the MACD and the rune lines don't tell us that we have a buying signal yet. So this is more of a speculative stock, but I really like to play these stocks, especially when there's an open gap, because gaps will eventually fill. So I would say go ahead and buy this stock if you want to play the med or tech industry, and set your limit order for the bottom of this candlestick. You're going to have to go and actually look at what the bottom is, but it's somewhere around 8.1. And that would be a decent profit. If you can move all the way from 6.5 to 8.1, that's a pretty significant ROI. So that's 23% right there. So that's Array. Another trade that pretty much always works regardless of what the market is doing is a gap trade. So if you are familiar with my gap game plan system, it's a course I teach on how to trade stocks with gaps in them, you will immediately recognize why we'd want to play Hill. And when you do a gap trade, it's all technical. We don't care about the stock itself. So here's Hill. We have a huge spike in the volume. Well, this is a weird chart. I'm going to go ahead and go to Yahoo. In case you're interested, I'm not interested, but we're going to see what it does anyway. Just because things are slow at the moment. But the daily tells us, okay, the daily is showing us MACD lines being bullish. So as you can see, the fast MACD line, which is the black one, is now above that 0 area, and it's moving up very quickly. So there's something wrong with this chart. We don't see the candlesticks for the past couple of days. That's why we're using Yahoo. So I'm going to go ahead and type in Hill. Check out what it is. Alright, so it's just a market. It's a data storage company. Kind of boring. But if this... Oh, here we go. Okay. The chart is correct. Here are the candlesticks. They're very, very small. They're very thin. But what happened was the stock price jumped, or it's possible that there was a reverse split. I don't think so. Oh, this is something actually you'd probably want to look into. I'm going to say that this isn't probably the right gap trade for the moment because I have no idea what's happening here. This looks quite different from what I saw earlier. Yeah, look at how thin these candlesticks are. The opening and closing prices are exactly the same. It's a very strange stock, so I would actually go in and see what happens. Yeah, but regardless, in a economy that is poor, gap trades still work. So if you're interested in learning how to trade gaps just by the technical analysis of a stock, go ahead and get my gap game plan system. You can just get it from my website, damonverio.com. Just go there and you will see it at the top under courses. Okay. Let's go on to the bonds area. Now, bonds are not stocks, and investing in bonds during a market crisis is usually a safe alternative to investing in stocks. But why is this in here? Well, because there are certain ETFs that allow you to play bonds just like a stock. So here's the one I've chosen, AGG. It's a bond fund. It's just a collection of bonds, and it moves like a stock. But what you're really investing in is bonds. So when the market's crashing, this stock generally will, this ETF generally will have a tendency to go upward. And you can see that the green Arun line is at an all-time high. 100 is the highest it can get, and that's a very strong sign that momentum is in place. Also, the MACD lines are very strong and moving upward. So this is looking good, and money is coming into it. Buyers are soon to be outpacing the sellers. It's just going to be a decent ETF to invest in and to swing trade with, depending on what's going to happen. So it's going to be a good investment if we have a bear market or a market crash. It's going to be a good swing trade if what we're seeing is simply a market correction that's going to be phased out in a week or two. So buy AGG, watch the market. If it's just a correction, sell it. If it's not, we'll hold on to it because it'll probably continue upward. Then there's the real estate investment trusts, which is essentially investing directly in real estate without having to buy a house. Now, as you know from 2012, investing in real estate during a market crash is probably one of the worst things you can do. People are selling their houses. But there are some good real estate investment trusts that will prosper during a market crash, and one of them is AMH. Now, what's special about AMH? You might know that the real estate market, REITs make most of their money from rent. So if more people are renting instead of buying houses, in that case, an REIT like AMH can move upward in price. If people are selling their homes or forfeiting their homes, then you've got a situation in which people are switching from buying houses to renting houses, and this is, look, they're leasing and renting single-family homes as rental properties. So they're probably going to be making money from more people. They're going to be able to fill their houses up in a more effective manner. And also they have a very, very low debt ratio, debt to equity ratio, which is good in a bear market. Do we want to look at it? We may as well. Obviously it's at a low. We don't see much in terms of the technicals for buying, but just know that if you want to invest in real estate, this would be a decent choice for a bear market should a bear market come. And then finally, utilities are always going to be in use. A lot of the blue chip utility stocks will be hit by a bear market or a market crash, and it's just not fair, but that's what happens. In any case, you can still make money by investing in utility stocks, and actually buying them at a low during the bear market is a pretty safe opportunity. So here's one, Chew. They are a Chinese cell phone telecom service. I believe they're listed, this should be an ADR, China Unicom. Anyway, they're listed, yeah, that's an ADR. So they're actually a Hong Kong company. You'd be investing in Hong Kong. You'd be hoping that people continue to make phone calls during the market crisis in China, which they will do. And if you know anything about China, most of the internet browsing that goes on in that country is through the phones, not through computers. Phones are cheaper, and I think this is probably going to do well through a bear market. It also has a dividend. Taking a look at it, money has flowed out of it. It's a very gappy stock, which is really good for gap trading and for volatility trading. But we see that it's got a little bit of a bounce back associated with a large volume. So we might be seeing the beginning of an upward trend, but you'd want to wait a bit to ensure that as an investment. This might be a good position trade, or not a position trade, but a swing trade for the upcoming week, which is why I recommend it. And as you can see, the weeklies have a gap. So you might want to buy this while it's at 14 and then put in a limit order for 15.5. That would give you a decent 15. That'd give you a decent 11% ROI. So I'm going to leave these up here. These are the picks. If you want to get into med, go to Array. Find a gap. Use my gap game plan system. Don't use Hill because I don't know what's going on with Hill. But just go here, select courses, gap game plan. You can get it on my site. If you want to get into bonds, besides directly buying bonds, you can get into ADG, which gives you exposure to the bond market. For REITs, you might want to get into this stock for the long term, but at the very least, it might be a decent swing trade. And utilities, well, most utilities are going to be used during a bear market. You've still got to pay for water and electricity. And now phone and cable are looking to be, well, phone is still going to be important, but maybe cable is going to be cut out in the future. I really don't know. But do your due diligence, check out whatever you want to check out in terms of these 4 or 5 categories that I've given you, and just avoid, for now, while the market is crashing, avoid those blue chip stocks, avoid penny stocks, because that's where money flows out first, and avoid growth stocks, and if you can, avoid value stocks. You might also want to look at, one thing I should probably mention, in Morningstar, if you scroll down and look on the right, you're going to see something that says beta. The closer beta is to 0, the better off you are for investing during a bear market. And if you get into those inverse ETFs, where you're investing in a fund that basically just shorts stock, you're going to see a negative beta. And that's actually pretty good news if you really think a bear market's coming. So pay attention to the beta of the stocks you're investing in. If the beta is really high, like I believe Apple is above 1. If the beta is really high, you can expect that stock to fall even if that company is doing well. So Apple, I think, is still doing pretty well, but in the last 3 days, it's probably fallen quite a bit because its beta is high and the market has fallen. So it's going to follow the market. Yeah, there you go. It's down 6%. Um, Beta is at 1.13. So if the market falls, you can expect Apple to fall. Stay away from stocks with high betas during market corrections. If you have any questions, leave them in the comments below.